Literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Rating Arrow. We are back at it again with our monthly portfolio update. The numbers are in from September, and we are getting down to the brass tacks of it, the nitty gritty. Now, those of you who watched on Monday, shout outs to Tuesday. I talked about I saved too much money. And as a result, the knock-on effects of saving too much money is A, my debt load went higher, and B, basically that's it. We also had a stellar savings percentage in a month that I was supposed to be focusing on paying off debt. So we have reset the challenge to force myself to focus in on knocking that debt load out for the month of October. As we're getting ready to talk about that, it's one of the things you got to ask yourself is, well, does high yield really work? Do these things, these people don't show real numbers. They're showing some spreadsheet, and I'm the same skeptic. They're showing some spreadsheet of everything that they're trying to do, and they're not giving actual receipts. They're giving curated receipts. Obviously, it's the highlight reel of finance with most of these people, most of these channels. And for me, I give receipts. So in the Robinhood portfolio update that we hit on Fridays, I give all the receipts on that. You get to see the portfolio. My monthly portfolio update covers the Charles Schwab portfolio, and I give the receipts on that as well. By showing the portfolio and then giving the context. It's kind of an important deal. So you guys are watching my journey as it happens, and I'm hoping that you're gleaning some insights into your own personal situation. Obviously, this is just a documentation of what I'm doing. This is not a suggestion on what you should do. This is a portfolio. These are portfolios that I've built myself with the information that I'm getting, much like how you guys are getting the school of YouTube, having intense conversations and back and forth with AI, any resources that are available to us as a retail investor. Obviously, since I'm showing you my portfolio, everything that I'm talking about are things that I have purchased. Like my money is in this, a chunk of it, not all of it, but a chunk of it, a good chunk of it, because income is very important if you are trying to not have to go to that 9 to 5 that you don't want to go to every day. And me personally, that's where I'm at in my journey. And we have figured out at least what seems to be a way out of the matrix. So I found a crack in the wall, and I have started peeling at the wallpaper. We are trying to see if we can get it open wide enough to escape. Now, before we jump into the show, I'd like to go ahead and have you guys do all the free things that you can do to support this channel, my mission, my content, the platform. First and foremost, hit that like button. Secondly, especially if you've been here more than twice, hit that subscribe button. And lastly, and most importantly, we are up to 400 subs. Our goal was to get to 500 this year, so that way we can get some sort of monetization. So maybe I can get like a coffee out of this. That would be dope. And we're almost there. We're 100 subs away. So most importantly, share the video, get me out into the algorithm, show me to some people who haven't watched this yet. And hopefully it spurs up some conversations for you guys to be able to have conversations about money as well, because the more you talk about it, the more you pay attention to it, the better your financial situation gets. At least that's been the way that it's been for me. Plus, there is nothing better than kicking back, having a cold one with your buddy, talking about the future and how it's going to be great, instead of how you're never going to financially recover from whatever financial malady has befallen you. Now let's go ahead and jump into it. I'm going to go ahead and make myself a micro machine and then get this up to the screen. We are in the in-home banking. We're going to run through these accounts to get to the important one. I always start with the in-home banking. What you'll see here is a growing cash position. We took out there's a couple of things going on in our in-home banking portfolio. It's the odds and ends. It's a catch-all for all the extra hublub blub blub from previous iterations of this portfolio, because you can't sell partial shares on Schwab. At least I haven't figured out how to do it yet. So when I sell out of positions, you end up with this like little bit of dust, and I'm just sitting on it. It's what I got. I'm holding on to it for dear life, I guess, waiting for it to get to a single share so that I can hopefully sell it. Important stuff to talk about. So we deployed our in-home banking funds. We are in the process of paying back our in-home banking funds. And in doing so, it is empty. We are building up a cash position. As soon as we get this cash position up to the bare minimum to get 100 shares of ulty, because that is going to be the foundational base of our cash reserve in here, we're going to start doing some call put wheel strategy on that ulti position to get me something a little bit more active, probably like a weekly call put strategy. So it'll be a cash covered put. Hopefully ulti dips down, gets me the 100 shares. We get a premium on that. We'll use that to buy additional shares. Then we'll put in a covered call for a week and, collect premiums off that until it finally hits. And then rinse and repeat. Now that we've got the cash, you put in puts on ulti, all the while you're sitting on the fund, on the position, you collect the income, the weekly income off said position. The other thing that we've got going on in here is our house savings. And the way that this is going to be working moving forward is I've conferred with people with way more money than I have, and I've been told to never sell my house, never pay it off. Anyways, I can sell it, I just can't pay it off. So this will be going towards our home improvement fund. We'll build it up until it's about $5,000, and if I have a project that I can throw $5,000 up front at, and then whatever else I need on the back end, we will then pivot over to using these funds for that. I am still doing the additional home payoff every month. So the 300 that I have earmarked that goes over into here monthly is still going over into here monthly. Pretty much I'm shaving off all odds and ends of extra income that I'm putting towards my mortgage, because I'm a little bit ahead on that. I keep that 2 months out right now. We'll probably be adding, will be every year moving forward. I will add a month onto it just as a cushion. I don't like having to rush. I don't like having phone calls about you owe me money. So I'm going to start moving that out. So come January, I'll pay an additional month that month, which also will likely come out of this pool because we will not be at 5,000 yet. Just to push me another month out. And then we'll start the process over again. This is going to be project money moving forward, but it's also just in case you need to float a little bit longer. All the extra stuff will be in here. And I think once I get to 3 months, having a quarter of a cushion to figure out what you're doing, 90 days. Actually, no, it'll be 4 months. Once I get out to 4 months. Well, actually, is it 4 months? I think it's 4 months. I'm going to do the math on that because I might have just made a math flub, which the way that today's been going would not be surprising. Divided by 12 months, 4 weeks. Nope, 3 months. So it is 3 months. It's not 4 months. So next year I'll be at my cushion metric. So at that point, I'll have a quarter. If anything goes sideways, I'm in a situation where I'm in dire straits. I've got a quarter to figure out what's going on, and I'm going to keep that And after I get to a quarter, I'm not going to worry about paying any extra. I will just pay exactly what's there. But any extra overflow that I have will move into the strike position, which obviously gets a quarterly payment. That it will also self-fund itself, and grow. And then as we get to around $5,000, we'll start making some semi-major repairs around the property or improvements, because everything in here is dated. So, having a pool of money to where when I'm ready to make the next move, I can either use it for a down payment or seed money for other real estate related ventures. But this is going to be my spillover for all the, hey, I want to be able to pay my house down. And eventually this gets big enough, hopefully, that it can start paying the mortgage. And then I can just throw in money at the mortgage quarterly and go, oh, okay, cool. Like now we have enough to where all income that comes in from this property goes into this position. That aside, it's just dust. This is kind of a little bit of a less important position. So we'll go to the next less important position also. So the next portfolio that we're going to look at is our long-term holdings. We have our Cantor Equity Partners, basically CEP, down 20%. Crypto, they haven't finalized. I also need to buy more because I want to have 100 shares of this before they convert over, because that's one of my holdings. I want to be in there with Jack Mahler. I do like his financial revolutionary zeal, and it is a crypto based deal. I need to get my 10 shares of our 10 shares of MSTR back over in here as well. Also, we have our monthly holding, our platform holding. We started instituting that purchase every month. So every platform that I'm on, if available, I will be buying a share of said platform, especially ones that I'm using. So I am using Charles Schwab. We're looking at Charles Schwab now. So I buy a share every month, and we've just been consistently doing that every month to, they're making money off me. I might as well get some of that money. Actually, I need to turn drip on this just in case, because I'm pretty sure banking stocks do a dividend, and we want all dividends rolled back into whatever they're doing. Do I think that this is ever going to hit 100%? No, but you know what did? Our Robinhood position is almost there. So like we're buying that up, and it's flirting with it, even with us buying a share every month, which is kind of cool. I like that. Now the greatest, the most important, the big jobba, we're going to jump into the income portfolio. So the account's total value right now, because we do have our margin. So we got $5,230.35 in our margin garbage disposal. Actually, it's our debt garbage disposal. So what that is we are transitioning up to $5,000, which we went a little bit over because I had a little bit of a payment that I needed to make to get some stuff handled. Little bit of that going on. So it's $5,230.35. The total value of the portfolio, if I didn't have the margin taken out, would be $38,688.37, with a cost basis of $41,976.01. Which means that, like, based on, if you just looked at NAV alone, this is a total loss of $3,287.64. If there was no context, but we'll go into the context here later, because this is high yield and we don't necessarily focus solely on the NAV. I care enough about it, but I don't care enough about it to do something else because there's nothing else that produces this kind of income. It's just math, and that is irrefutable. So the positions that we currently have in our current setup, we have blocks, which is our cash reserve position. This is our safety guy. I threw a couple of shares in there. I'm cutting all of our odds and ends. If we breach $25, basically, I am putting that into blocks moving forward. We might make some other strategic positions since we're down on some of these other positions, but I need to start having a cash reserve, and I'm going to start funding that actively because I don't. And so what we're going to do is we're going to do a split over here. We're going to have blocks and STRC from MicroStrategy Stretch are going to be the cash reserves positions. Obviously, blocks will be like the longer holding position because that hopefully will help also bolster my margin ability for this account because it's very risky. So my margin got clipped a little bit, switching over just out of the Misty and the other positions that I had. But blocks seems like it's one of those slow goers. Stretch for sure, because that's basically a high yield savings. And we're looking at a target of 5% of portfolio value for now. It needs to be 10, and I understand that. But I play a little bit on the wilder side. So for me, getting to 5% is going to be hard. Once I get to 5%, then the next stretch will be to get to 10%. And that's what we've got going with that position. The next one is TSYY. Going to be doing a video on this. This has been my silver bullet as of late. It's actually flat in gain loss, which is awesome. It's been holding pretty fairly strongly for quite a while. I started buying this, and then I realized I should have probably bought this as just based on the way it's been paying as the first position versus ulty, but hindsight's 2020. This guy right here is inexpensive and pays well, and that's the sum of it. It's based on Tesla, which is going to be another position that after we get the debt paid off and I'm starting to actually buy full shares of the underlyings of these, Tesla is going to be going into my long-term holding portfolio. I've got ulty, which is our base foundation right now. We're down 8% on that position. Obviously, they had a little down wick. They're still paying within range, so I don't care about that. We've been getting above 8%, which is what I base this position off of. We've got the 3,144 shares. Tesla, we are targeting 1,300 shares. It's currently paying enough to get us over our $250 metric. But the way that we line that out is it needed to be 1,300 so that when the payments go down, like I base it off of the most recent worst payment I can find. And I'll scroll all the way back through. I'm just like, hey, when was it god awful? And I'll base my position around that amount because then you have a little bit of overshoot that you can reinvest, put in cash reserves, all that good stuff. Last but not least, we have xbty from graniteshares. We have 643 shares of that. We are down 12.44%. This one has been performing. We are in our range for this one as far as our low payments. The payment is paying. It's got us over 250. And the goal is each one of these positions pays 250. The next position that we add in, because I do have one more position that I need to make this paying $1,000 a week. But right now, all of these positions are over our 250 metric as of the last week of September. But this one needs to get to where our target was because Tesla, specifically for those of you who are watching, I'm talking about Tesla, TSYY. The position that I lined out, it's paying more than what the worst payment is. All of these are at present. A little bit. XBTY is paying almost at the level. So my last payment was like 251. TSYY jumped the gun and it's paying at 250. Right. My last payment was 250, which is pretty nice because XBTY and TSYY both pay on the same day. So that's a $500 day at that point. Ulty killing it. So I got 287 off of that, which was how we got our second share of blocks. Because if I'm not, I started the position with my monthly buys and I went ahead and bought a share of blocks. And then Ulti paid and I was like, oh, I've got a little bit extra over there. It's over $25. So I bought an additional share. Hopefully we can keep that going, get a share of blocks a week. But I've got to finish out this TSYY position. And then honestly, I'll probably start rolling all the extras into the next position that I've got going for this portfolio, which you'll see when it shows up. It's going to be a surprise. But I'm going to also do a video on TSYY because I've talked about XBTY in other videos on other spaces around here, on other episodes. But I think I'm going to do a couple of dedicated videos on my position, the ideology behind TSYY, XBTY, and blocks. And also, well, I've done one on Ulti. But yeah, we're gonna keep moving with that. So the next thing we're gonna do is jump into the context. So this is where it's gonna get interesting. Now, as you can see, this is Snowball Analytics. It's the analytics software that I use to track my dividends. It helps give me insight into the way that I'm investing, specifically in the dividend game, because like I can't just like go on and look. Like, this gives the context, because if you just look at the portfolios, an income portfolio is always red, and that's the reason I keep my portfolios separated. I don't like just jumbling a bunch of stuff in one portfolio and then being like, oh, well, like, why is your portfolio constantly red? It's like, oh, well, there's a ton of income in there also mixed in with other stuff that I'm looking at growth. It's going to throw off the way that you're looking at the portfolios, because different portfolios do different things, which is why structuring them is important. It's also why segregating them is important. Like, you keep them separate. So all my income stuff, and I really got into this over in Charles Schwab, is like, that's just income. My in-home banking, that's just in-home banking. That portfolio goes up and down all the time. I'm doing trades and sells out of there. I like to look and see what that's looking like. The income portfolio, constantly from a NAV perspective, is in red. It's always in red. What I'm looking at over there is, how much income are we producing? How much income are we generating? How much are we getting paid? When I look at my growth portfolio, that's the one that should not be in red very much. That's the one you don't want to see in red. So like, if I'm looking at my growth portfolio, long-term holds, CEP being down 20%, like, I'm like, hey, like, are we buying this dip? Are we doing something with this? Charles Schwab, is that going up because we're holding it for a long time? The other positions that we're going to be adding in there, we're going to want to see growth off of them. So you want to see that portfolio, the NAV needs to be in the green. But they do different things, and that is important to understand. So the Snowball Analytics is the context. Personally, I don't buy anybody who isn't doing something that is tied to their brokerage at minimum. It's the reason I love Blossom. If you're not on Blossom, you scroll down in the description down below. I've got my Blossom referral link in there. Sign up, because over there, you have people with verified portfolios. You get to have an opinion if you have a verified portfolio. I don't care what your prop spreadsheet says. I don't care what your propped Snowball Analytics says, because you can do the same thing over here. Like, you can print a pretty picture over here and have it be, oh, you added this manually, and you get to finagle the prices so that you can make it look some way that it's not. You can fudge these numbers too. So if you're just looking at a Snowball Analytics page and they're not given the context of the receipts, namely the portfolio, they don't give whole account numbers, guys. Those days it's not the 90s. Okay. That's like, get over it, because the reality is most of you are liars. I'm just saying. So here are the things that I look at and how I use this tool. Obviously, this is synced to my brokerage account because we just looked at the brokerage account. The income portfolio is the portfolio that's synced up over here. As you can see, the $5,230.35 of negative cash minus 15% is in there. You can see 38,688.37 value invested. The value of the portfolio versus what's been invested, which is $41,975.99. All there. Receipts match. Now we can do the context. Hold on a second. Now we can do the context. The context being, these are the things that I look at in this portfolio. I'm looking at the value, obviously. You've got that over there. But like the deal here is, why is it up 11%? That's because the total value invested, the value of the portfolio is $33,458.02, which is a little bit off from this, but it might not have fully synced some of those positions yet. But the total profit, you go into it and you look at this. So you've got a capital gain of a negative $3,287.61, which I sold off a bunch of Misty. When I got out of that position, it was all at a NAV loss. So there's that. Realized profit and loss of negative $26,295.55. But then you look at the dividends, which is what this portfolio, because again, you're swapping in and out of positions. Once something starts underperforming and you sell it, you're selling at a NAV loss darn near all the time. Dividends received, though, let's talk about it. $37,277.72. Another thing with high yield, what do you do with the money? What is that funding? So for me, it's eliminating debt. Obviously, we're reinvesting a little bit into the portfolio. Also, we are looking at funding other investments. That's another big deal, is the long-term holdings will be funded out of the primary income portfolio. My long-term holdings over in my Robinhood account will eventually get funded out of the lifestyle income portfolio that I have over there. What you do with the income matters. Also tracking where that income went, because if I get $37,000 and I invest in a MicroStrategy or Bitcoin, and Bitcoin goes up 100%, MicroStrategy goes up 200%, then those dollars produced rampant growth. And those are things, that's the way that I'm running my portfolios. I want rampant growth or I want income. If I invest those dollars and they produce more income, because I've yet to see anything go to zero, at least since I've been in this space. And like, if you're dumb enough to ride something to zero, then that's also on you. You have a acuity problem. So as I'm moving my positions around, you requires active management. There's no free lunches. There's no free milkshakes. No one's coming to save you. You have to actually pay attention to stuff. And if it gets to a point to where you're like, hey, I need to cut bait, that's on you to cut bait. Hold that L if you have to. But if you're tracking it this way, then you at least know where you're sitting with all of your positions. This is an important one for me, the passive income percentage, especially since I'm actively using it. I am currently at 105.57, which is equating to, with my portfolio, $40,843.09 annually projected. It changes because we get paid weekly. So like these numbers get adjusted every week. But as it sits right now, we're looking at the 40,000, almost 41,000 over the next 12 months. And that's just with what's in there. We are constantly adding. October, we're looking at a potential for $3,428.67. Looks like we got quite a few Tesla payouts that they're projecting in there. XBTY. Oh, XBTY is being projected low. Okay. So see, and this is why I look at it, because it's got what's been declared, like what's over there. And yeah, so we need to buy XBTY. So everything is in alignment except for XBTY. Now that's still going to be, that's not going to be a $500 day. It's going to be almost a $500 day, but XBTY has fallen down. So we need to reassess how many shares of XBTY we are getting, which is kind of crazy, because now instead of the money that going into TSYY, it's going to go into buying XBTY until we get up to our position to get that back to 250. It's going to be a little bit, but like, I need to buy more shares now, because worst case scenario has gone a little bit worse than worst case scenario. So they've all declared, we know we now need to buy more XBTY. Interesting. So the following, and so like it kind of gives you a guesstimate based on the payouts from the following month, from the previous payouts. But yeah, so this adjusts as we move through and get through these months, which is pretty interesting. So those are the things that we're looking at. Also, we're at 68% of our goal of $60,000 in this portfolio. Obviously, this portfolio will be the catch-all for our right now it's for paying off debt, but it'll be the eventual catch-all for all of our reoccurring expenses. So the $60,000 cushion is your mortgage payment, your utilities, for those of you who don't own a home, rent, car payments, everything that you need to live, internet, all that stuff. And I'm going to, as soon as this gets paid off, the debt gets paid off, we'll be shifting over to annually trying to, pay some of this stuff off, like shifting a lot of our stuff over, like car insurance, your insurance payments, moving that to yearly. Because then if you pay it in bulk, you pay it up front, you get a discount. So we'll be moving that stuff over there. We'll also be pulling fuel out of this, because it doesn't actually cost $60,000 to exist for me. This is an overshoot. And honestly, for 60, we are looking at, I could live off of this if I needed to. I can exist. And then we're looking at 2.5 to 3xing this target before we are able to leave the job market, which means that the initial year that we get out, because this should be hitting parity in 2026. They're saying that I'm going to hit my goal next year at the rate that I'm going. Now, with what's going on and what I'm doing financially, we're looking at being able to officially be out of the rat race, because I'll be work optional in 2026, which is awesome, but I won't be able to leave. It'll be hey, I could go take a lesser paying job, but I guess it's optional though. So I'm barista fire in 2026, 2027. If I'm still working, it's 100% by choice. There's no questions asked. I wouldn't have to go do barista anything, because we're going to take all that money throughout 2026. We're about to make a Herculean effort to get rid of all debt by the end of this year, all of our consumer card debt. And then in 2027, that leaves this portfolio to just set up our investments, so that way we can be structured and able to get out. So that's kind of where I'm sitting, where I'm at. And then the other thing that I like to show are the holdings, so that way we can look at the positions, see what we got going on. So Blocks only got 2 shares. Obviously, it's early in the game. We're at a 2.47% total profit, which is cool. We're sitting in the green on that one. Graniteshares, we are sitting at a total profit of 7.34%, sitting good there. Ulty, we are at a total profit of 4.51%, which is cool. XBTY, we are at a negative 4.95. So this is what I look at, because if I get to like a -10 on this, that's when I'm starting to make decisions on if I'm going to roll this position into something else for a little bit and then like restart this at the lower rate or what. Because but this one, we did just make basically a handful of buys to get to this position swiftly. And so our cost per share is 21.64%. So now that we have to buy a little bit more since they've declared their dividend already, this will come down a little bit. But like, since we're still actively buying it, it's like, yeah, like we're going to be actively buying it again. So this will come down a little bit, which means this will come down a little bit. And then once we get back up into getting because like we're still also collecting dividends off this, but for this one, we'll probably be rolling at least this week. If we get any extra, it'll get rolled over to buy into this position, most likely. Just because of where we're going to be sitting, because yeah, that's going to affect us. And those are things that you have to watch when you're in high yield, because the market and the way that these are positioned to function efficiently, it's not always hitting those conditions. The plus side is it's always paying, but downside, not always hitting the conditions that you're wanting it to hit so that these function the way that they're intended to. So you got to watch it. Like, this is something that gets managed. It's not like you have to watch it every second of the day, but you got to tap in at least on EX dividend date, like when on declaration day. So that way, you know what's being declared. That's kind of my 2 cents on that. That's what we've got as far as the positions go. I mean, we're doing a bunch of focused stuff. Like, obviously we'll be putting a lot less money into the system this month, because we are focusing on getting a chunk and getting this debt kind of wrangled. Because like, if I save too much money, my debt goes up, and I don't like that pendulum either, because once the debt's paid off, I don't have to worry about it, because it's not going to be a pile of debt anymore. The mess will be cleaned. And once the mess is cleaned, I'll be at liberty to invest the way that I see fit and the way that I want to. That said, I have to like focus in and do it. I mean, granted, we're still going in the appropriate direction. It's just, like if I lose focus and I want to hit a 60% savings rate, there's a cost for that, because every dollar that goes into the market is a dollar that I did not pay my debt off with. Also, I still eat and like buy stuff, which means that like now it's just going up a little bit. And I'm like, okay, well, this is acceptable because I've got plenty of money coming in. I'm going to pay it off later. Well, later does actually need to happen. And even though I have been in scenarios where I have opted to buy things like Bitcoin in lieu while running up debt like a bandit, ridiculously, like just life debt, not like, oh, I went and bought extra stuff. But I've been in that scenario and it's worked out for me, but I understand the risks of existing like that, because what if something goes wrong? And that's kind of the thing that I don't like, especially when I have as much money coming in right now as I do, because obviously this is the second month that we have beat our take-home pay. So I'm getting paid double what I was now. And just the understanding that like, hey, if you didn't have that pile of debt, you could just invest that money and like, it wouldn't be that big of a deal. Like, obviously some of it would be going towards debt, but with my goal of living out of my brokerage, the initial one, like our primary brokerage, because like once we have both brokerages up and running for their intended purposes, then that's going to be a totally different ball game. But as I'm trying to shift and pivot over into that lifestyle versus get a paycheck, spend your whole paycheck, have no money left over, also didn't invest, also broke, also can't have anything go wrong. I'm moving actively towards not living like that. And I also don't want to do it in a reckless, even though I'm reckless, right and narrow, I don't want to do it in as a reckless fashion with this system that I'm setting up as I did when I decided I was going to go down the rabbit hole on Bitcoin. I was like, I'm not going to pay for, I'll just put everything on the card and buy Bitcoin. That's what I'm going to do. So, and I mean, it worked out. We paid it off. I still came out ahead with a ton of Bitcoin. I got over my 1 Bitcoin threshold and all was good. But it could have all been bad, and I'm not an advocate for that. And also at this juncture in my life, I'm not trying to live like that. And I have less debt, so it's like, just get it done. And that's where I'm at. So that's kind of where I'm sitting. Let me know what you guys think. Am I crazy or am I a genius? I don't know. I think everybody's a little bit of both in this space. Like we're like crazy geniuses. We're mad financial magicians. We're mad scientists. And this is kind of the financial alchemy that I'm working with. But tap in with me down in the comments because I do read them. I do reply to all of them, and I do appreciate them. Also, on the way out, do not forget to hit that like button. If you haven't subscribed already and you made it this far in the video, hit that subscribe button. And last but not least, don't forget to share the video because we are at 400 and we were trying to get to 500 by the end of the year. And then, you know, we'll have a little celebration. I got a couple of platform changes that once we have a little bit of monetization on here that I'm going to experiment with. So the 500 subs is going to unlock a little different version of the channel that I think will be more interactive and better for the people who are tapped in over here with me. So yeah, till next month, people, this has been another portfolio update for the month of September of 2025. It's your boy Reckless Ray Dinero, and I'm out. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't blame it, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.